What's up, my millionaires, billionaires, trillionaires that's entering this crypto space? I welcome you to this channel. You are that one percenter. You are that great investor that holds XRP. And if you haven't right now, subscribe to the channel. Subscribe. SEC wants Ripple employees Slack messages. SEC just know that they're going down on a turmoil where they're not going to win this case. So the SEC attorney George Tenero has filed an emergency motion in order to obtain a court order that would force Ripple employees to hand over their Slack communications. There are over 1 million messages that have to be searched, according to the SEC, since Ripple employees communicated by Slack as often as by email. They have produced terabytes of data. The SEC claims that the defendants agreed to search all messages at the beginning of the discovery phase. Its production, however, ended up being limited to only 1,468 messages that nonetheless can contain some critically important information, according to the agency. Now, the San Francisco-based company is refusing to provide access to the rest of the chats after blaming a data processing mistake on its initial reluctance to cooperate. All right. So, critical evidence, that's what they say. The SEC states that the Slack messages that it did manage to obtain contain some critical and unique evidence, particularly the conversation that the regulator has seen touch upon Ripple's desire to create speculative XRP trading, the company's concerns about the XRP price, the impact of XRP sales on Ripple's businesses, as well as the cryptocurrency regulatory status. Family, I'm telling you right now, if you don't hold XRP, I don't know what you're doing. I'm not a financial advisor, but I do know, beside this news that's coming out to you guys right now, nothing is going to stop XRP. Okay? So the U.S. Infrastructure Bill Cryptocurrency Amendment to provide clarity on taxes. Okay, this that he want to do with the taxes with, with the XRP, not just with XRP, with the whole cryptocurrency. But as you know, the U.S. Treasury Secretary Janet Yellen answers questions about the Senate Appropriations Subcommittee hearing to examine the FY22 budget request for the Treasury Department on the Capitol Hill in Washington. So, like what I said, with this crypto taxes that's going on right now, all countries has to deal with it. But as long as you hold certain assets in this digital space, nothing will stop you. There's no roadblock. Do not get mind blocked about everything that's going on. You see the prices going up. You see Bitcoin going up. So if you see Bitcoin going up, what makes you think XRP and all these other digital assets will not rise as well? Okay, family, we're just on that time. We're in the beginning phase. Okay, we're in the beginning phase. And for the ones that have been into this space for years, just know our time is coming, family. Our time is coming. So I'm going to play these videos and check it out.
Reporting requirements, and there's intense debate over whether the current language in the bill applies to miners and software developers, and that's stoking outrage among some of fintech's biggest CEOs. Coinbase's Brian Armstrong tweeted, quote, "History will not be kind to any politician who tries to block Americans' access to new technologies. Americans have a very low tolerance for taking away our rights and harming economic growth." Twitter CEO Jack Dorsey wrote, "This bill has so many issues," and he said one of the amendments from Senator Mark Warner only makes it worse. Meanwhile, Elon Musk got involved too. He said, "This is not the time to pick technology winners or losers in cryptocurrency technology. There is no crisis that compels hasty legislation." Now, GOP Senator Rob Portman, who helped write this bill, said he gets it.
In particular, we want to be sure miners and stakers and others now or in the future who play a key role by validating transactions, or sellers of hardware or software for digital wallets, or node operators, or others who are not brokers, are clearly exempted.
Now, the final vote on the infrastructure bill is scheduled for early tomorrow morning, but Republicans and Democrats are negotiating right now to speed up that process in exchange for the chance to make additional changes to the bill, including on the language around cryptos. Guys.
So, Elon, a lot of these big crypto advocates are making a lot of noise talking a big game, but what's the alternative here? I mean, you look at markets like China and India, and they are not any friendlier towards crypto. You could argue they're a lot more stringent. So what's the alternative? Have you heard any threats from the crypto industry about what they can actually do or would do if this bill passes as is?
Yeah, there's really not much that they would be able to do. I mean, one of the reasons why this is such an important piece of the legislation is because it's a significant pay for this $1 trillion spending bill. So this provision is expected to raise about $28 billion in increased tax revenue because people will be paying more taxes since the IRS has more information about them. And the Treasury Department is really concerned that a lot of the gains in crypto are going untaxed because they simply don't know about it. And so that's leading to a dramatic loss in revenue that really the administration is counting on to be able to pay for some of its ambitious spending plans.
Elon, how much of a surprise was last week's groundswell, I guess it's fair to call it, over this issue? It reminds me a bit of the net neutrality blowback from a couple years back that it seemed to me caught some politicians by surprise in the social media fueled nature of it.
So it was no surprise that Treasury had the authority to do this and that this would be part of a bipartisan infrastructure bill. But I think there was concern around sort of the actual details of the language once it got released. Remember, the text was not released until I think it was Monday of last week. And so that's when industry really got a chance to sort of dig in and make their case. Now, the administration would say that the way the language is currently written is just fine. It doesn't sweep up all these players who have only bits and pieces of information around who holds all these different cryptocurrencies. But there is concern that when Treasury actually writes these regulations, if this bill does become law, that could create some burden on different parts of the industry if the language is not clarified at the outset. It's a lot easier to fix it going into the game.
Landscape. Joining me now is William Quigley, one of the co-founders of the stablecoin Tether, the co-founder of GoCoin and VC firm Cryptocurrency Partners. William, you heard what Elon just said in terms of the debate up on Capitol Hill. What is the issue here right now from the cryptocurrency industry's perspective? What's the problem with this bill?
So you have two broad issues. One is a revenue enhancement part of the infrastructure bill, and this would be to tax crypto more than it's taxed now. And the other is how the IRS in the United States will figure out which transactions are happening by who, and so who actually owes these tax bills. The fact that there will be potentially $30 billion of taxes that will be collected over the next few years as a result of better tax compliance, that it's hard to debate with because there's no underlying assumptions built around that. So somebody put a figure in there, but we're not sure where it came from. As far as the tax compliance goes, there's always been an assumption that cryptocurrencies aid in the evasion of taxes. And while there's almost no evidence to support that, that's an assumption. And it's because it's anonymous. Who buys and who sells can be anonymous, not always. So what this infrastructure bill is suggesting is that we start to do a lot more reporting akin to what you see, let's say, when you open a bank account or when you do a stock trade. So what we call KYC, which is know your customer. This is sort of procedures that would be submitting your identification, letting the crypto exchange that's selling your currency know who you are so that they can file reports with the IRS. That's not controversial because it turns out most businesses that are taking in money in order to do something in crypto, they have to know who you are anyway, simply to make sure that there's not fraud, identity fraud or credit card fraud. The issue is more around who in this blockchain industry is going to be required to report. And if there's a centralized business like an exchange that has people you talk to who can request this, it's fine. But there's a number of things in blockchain where it's just software that you're interacting with. It's a smart contract. In those situations, there is no individual who is operating that piece of software who could do the collection and the reporting. And I think it's more of an education problem for the Senate to understand this, so that they don't disrupt the entire cryptocurrency industry by asking for something that's simply not